Let me just move on here and talk about the IPO market because it's doing great. And we had a huge potential IPO announcement today. Jack Ma's Ant Financial, which is the #1 fintech company in the world right now, let's face it. It's a subsidiary, essentially, of Alibaba. They're kicking off their IPO, but not in New York and not in London. They're going to do it in Hong Kong, and they're going to do it in Shanghai and on the tech exchange in Shanghai over there. Guys, either one of you take a crack at this, but I think there are two important stories here. First, it's not New York or London, and I think that's the result of some real geopolitical tensions that exist. And secondly, it's huge. I mean, they're talking about north of $20 billion here. If that is the case, this could be the second or third biggest IPO of all time here. I mean, #1, of course, remains Saudi Aramco at $25 billion. Alibaba's at 21. But if Ant Group goes over to 22, it could be the second or third biggest in the world. You get the idea here. U.S. Visa's way down there at $17 billion. So I guess, Todd, your thoughts on that, and how do you play this? I mean, how would investors get into international IPOs in an ETF space?
So the IPO ETF space is relatively limited. IPO, the ticker IPO, is one way of doing it for U.S. exposure. The firm Renaissance also offers an ETF, IPOS, that is the international companies that have gone public within the recent period of time. About half of its assets is focused on China, so it's logical that this is the ETF that's first to get exposure to it. But then again, this is likely to be added into those broad emerging market ETFs or China-specific ETFs. And you can get IEMG and VWO, the two heavyweights within the emerging market space, to get exposure to it at some point. And you'd likely assume it'll be in China ETFs like MCHI and GXC once it makes it past the criteria. But it's very interesting to see that this is not going to be a U.S.-listed company.
Yeah,
well, that's what I find most interesting.
Yeah, there will be a delay,
Go ahead, Chris.
Todd. It won't happen right away. I think if anyone has the ability to do it quickly, it's to your point, Renaissance. But the broader indices, look, just like any other big company, that meets the criteria for index inclusion, we expect something of this size and this magnitude would be up for consideration, probably, in the fastest order of time possible to be included in indices. And then all of those passive indexes that Todd alluded to, all those that ETFs that track those indices will be having to add that name if it's allowed. Right. Again, there's been a lot of chatter about what might or might not be allowed going into the second half of this year.
Right. So that's my point. The whole IPO thing with China has gotten dragged into all of these geopolitical issues around the trade wars, around coronavirus, and I don't think it's a coincidence that they're not listing in New York or London at all. I think there is obvious political pressure on some of these companies over there to list over here. They may not feel welcome here. There are still companies coming from China, but they're certainly not on the level of Ant Financial. I wonder, guys, is the U.S. missing out on something at this point? Have we deliberately drove people away, or is this, sort of the way the cookie crumbles when you're dealing with the fallout from geopolitical tensions?
Well, I think that you'll see there'll be an opportunity for U.S. investors to find ways and to find vehicles overseas to get access if they absolutely need to get access to a security like this. But to your point, look, the geopolitical tensions are definitely going to be an issue, going forward, and it's something to keep a very close eye on.
Last word to you there, Todd.
I'm sorry, just to jump in quickly. This is the benefit of what ETFs offer for U.S.-listed investors to get exposure to harder-to-access international markets, particularly like China. So even though it won't list here from an individual stock perspective, U.S. ETF investors are the winner again and again and again.
Yeah, I think that's absolutely the case.